Welcome to Building Tomorrow's Insurer. Today we have got the absolute pleasure of Carl Nakatsuji, who's the founder of Clearcover and very newly established in the last 6 months or so, I think. We'll get into it, which is Dearborn Labs. Kyle has, from a bunch of digging I've been doing, and to be fair, I've been watching from the sidelines Clearcover journey for a while, and it's interesting, Carl, we'll get into this, which is you've really come from every angle, right? You've got kind of lawyer, then you like venture investor with American Family, then you kind of started kind of one of the, I guess, kind of V1 in terms of insurtech, so Clearcover, and now leading the way with Dearborn. And so you're going to have a massive amount of perspective that I'm really excited to get into, because you've seen, I guess, a bunch of transitions, and we're kind of going through another transition now. So look, really great to have you. Looking forward to the conversation. So thanks so much for giving us your time.
Nigel, thrilled to be on the podcast. Thank you for having me. And yes, I think what you're alluding to is I've made many terrible mistakes over the course of my career, which I would be happy to share with you and everyone to help them avoid the same.
I appreciate it. Just always learn more from pain than you do success. So
that is very true.
It's more painful, but it does help more. You maybe let's just dive straight into that nugget, right? Which is you spent a decade basically building a tech-enabled insurer, really at Clearcover, really long before many of the incumbents were taking digital transformation very seriously, and now you've made a jump to start Dearborn Labs. And I think I kind of read some material that you put out which said kind of even as that 10-year-old native insurer, you essentially need to be rebuilt for the AI era. And so maybe let's kick off, because every startup I speak to is having this conundrum in their minds of what do they do with the business. And so talk to me about it. Like what's changed so dramatically in your mind that you've come to that conclusion?
Yeah. It's a fascinating question. So going back to the story, I'll tell it briefly. I won't monologue that much. So we started Clearcover about a decade ago, yep. And the thesis when we started the company, as you suggested, was if you built an insurer from scratch using what was newly available in terms of technology, you could use unique distribution, you could create better customer experiences, and maybe, in the long term, more importantly than all of that, you could create an advantage cost structure. Right? You could create operating leverage by using technology to run the business more efficiently. And so that was the founding thesis for Clearcover. And as you suggested at the time, there weren't a ton of people thinking about how do I use technology simply to create a better cost structure.
And is that when you say, God, should jump in there, when you say cost structure, that's really just like loss ratios. So you could operate the business in terms of from an operational perspective, much better, get better claims ratios, better loss ratios, and therefore better commissions, better like tech costs, and therefore, I guess margin wise, the profile looks better.
So interestingly, yes. I mean, I suppose if you look at our history, I can't hide it. Like the loss ratio has gone up and down. It's quite healthy now. So we learned our lesson. But when we started the business, interestingly, it was less about what we could do with technology to impact the loss ratio and more about what we could do with technology to impact the expense ratio. Because as you unpack an insurance business, what we thought is because of how advanced most companies were, access to data, regulation, there was less leverage in the loss ratio than most people expected, particularly, please keep doing so. It'll be more fun that way. So we decided to build this insurer focused on cost structure, made a million mistakes along the way, and we can go into all of them as much as you would like. But to your question specifically, we for years felt like we had built up a technology asset, both in terms of the technology we built for Clearcover. We built our own policy admin system. We were very early adopters of generative AI and AI generally in terms of risk models and sort of LLMs that interact with consumers and LLMs that are built into tools our employees use. And so we had invested a lot of time, energy, and money in building this tech asset and did feel like it could help others, but honestly just didn't quite know how to do that and really hadn't put much thought into it. And so sat on it for a while. And then in January, when Anthropic rolled out Opus 6, and then the sort of suite of tools that were built on top of that in the ensuing, it was something like they rolled out like 45 products in 45 days or something. It was incredible. My co-founder at Dearborn Labs, who was our COO at Clearcover, and I sat down and had a conversation around what we needed to do at Clearcover to adapt to what that technology was now capable of, because it was capable of so much more than it was even months prior, months before, and capable in terms of like end-to-end reasoning and solutioning of complex problems. And like you look at all the benchmarking tests and like you can see like market improvement in benchmarking from one model to the next. But when we just applied it to the work we did day to day in our business, it became very obvious it was much, much more capable than it had been in the prior iteration. And so when we sat down and said, knowing what we know it's capable of, what has to change in our business? And the answer was everything. And if we're 10 years old and we built this company to be tech native, and oh, by the way, we were very, very early adopter of AI, and we have to start from scratch, everybody's going to have to deal with this problem. And that was really the catalyst for us to say, it's time for us to put this technology and the engineers and the people who build this technology to use to help the rest of the industry, which led to the formation of Dearborn Labs.
And so then talk to me about that in terms of, so you made that decision. And by the way, I could not agree more. We had similar conversation internally. We've done, if I look about the product cadence and what's happened in the business over the last 6 months, it's been most insane 6 months of the journey. But so you kind of made that call and said, okay, sit down. We need to not just build this for us, but we need to, we've got all the kind of engineers understand insurance, understand the domain, and we know that everyone's going to have to go through this journey. So we want to be part of the solution to solve that. Like, take me through that piece, which is you make that decision and then you go, okay, like how do we have these conversations with our customers? How do we have the conversation with new potential customers? What do we do in terms of platforming? Like, take me through that thinking.
So it's a great question. And there were a couple things that I think came together to create the founding thesis and strategy for Dearborn Labs. So one was, for a number of reasons, we had the opportunity to spend time with a handful of other insurance businesses and had a chance to see firsthand a couple of times how impactful applying our technology, and in particular, and we'll talk about this, I'm sure, but the impact our technology had on the underlying inputs of our business and how that impacted the financials of someone else's business. So we said, well, look, if we can actually apply this technology, we can see very clearly in the data that it's going to create a massive financial windfall for another business. And so we had a couple of experiences where we were like, this really could be economically useful for people who are not us. And then we sat down and said, okay, what do people need in this moment right now? We're like where we sat down, where you sat down, everybody's looking around and saying, the world just changed, now what? What do people actually need, and what do we have, and how do we find like the overlapping part of that Venn diagram? Because that's where we're most likely to find product market fit with this new business. And what we thought people needed more than anything was two things. One was of a relationship that started more with a services angle, where we really take the time up front to understand what the AI opportunities are at the business, and which of them are highest leverage, and how they come together to sort of think about new systems and new workflows and new ways of doing work that take advantage of AI. And so this part at the front end that's services oriented, where we really do work in sort of a consultative frame to sit with the client, do some boot camps, and like really understand their work and how it might change with AI, we felt like would help people sort of separate the signal from the noise, which was a really hard thing to do. I think you and I both run companies. No offense to there's plenty of great vendors out there, but like your inbox is probably also full of about 100 emails every day from different people who do something that sounds kind of similar. And so like we really felt like, as operators for a decade, helping people sort of make sense of what was happening before you make a financial commitment to rolling out AI in your business was a really important part of the value prop. And again, we had done it for a decade in our own business, and so we felt like we were in a great position to try and help. So that was development one of how, what we really think we had to offer.
Yeah.
The second is, and I'm sure you've seen it, we witnessed firsthand in our own business, because we made these mistakes ourselves, and then saw it happen elsewhere, that AI implementations in an insurance business tend to have 4 common failure modes. Mm-hmm. And we wanted to build a business that solved them. So the first common failure mode was that you hire someone to come in that consultative frame, and they give you slideware, not software. which, is there's some value to it, but a 100-slide presentation that tells you exactly how to run your strategy for the next 3 years when you simply don't have the talent, engineering, or a way to start is just not that helpful, and it turns out it can be kind of expensive.
McKinsey and Accenture do a good job there.
I know. So they great businesses. They make plenty of money. There's great people work there, but like slideware, not software, was not the way to deal with AI moving as quickly as it was. So that was failure mode one. Failure mode two was there were a lot of people starting to bolt AI on top of existing workflows that were not meant for it. Mm-hmm. And when you bolt AI on top of an existing workflow that was not meant for it, you're going to end up with an inadequate outcome. Because in many cases, what you're going to do is not lose any of your expenses. You're just going to add them from spending AI, and you haven't taken full advantage of what the AI is capable of. And so we just had this fundamental belief that you have to reinvent the workflow first around what the tool is now capable of and likely to be capable of. And a lot of people weren't doing that. It takes somebody with operating experience, and it takes people who are going to step in again and like take that consultative approach to helping you redesign workflows, not just plug in technology. Failure mode two. The third failure mode is that there are many places where using a platform from someone else makes sense. But in today's world, there are new places where building your own technology makes a lot of sense. And so we felt like there were opportunities to build versus buy that many insurers should be taking advantage of, either to protect some proprietary data asset or to maintain some proprietary part of their workflow or to really focus in a product on the things that make that company great. Again, there are many great reasons to work with a platform provider. Sometimes, even if you try customizing it, you end up making a whole bunch of compromises along the way that you were happy to make before because it was too expensive to build. In today's world, the cost equation changed. And so we wanted to make sure that, there was an option out there for people who were leaning more towards build for some use cases when they used to lean buy. And they got AI if they were to buy, but they would have gotten a better outcome if they would have chosen to build. And so that was failure mode three, is like you should have built and you bought and now you can build. And the fourth failure mode was that there are people out there shopping for way too much platform and not enough application. Which is to say they were getting pitched by and spending a great deal of effort, time, and money buying these large horizontal platforms that were supposed to help them implement AI in their business. And it turns out that they get so expensive, by the time you actually roll out enough AI applications that actually have enough ROI in your business to return what you're spending on the platform, you maybe never get there. And so we had this belief that like there should be a way to go in and sort of build just enough platform. Data, you need to think hard about what data is available and how it's available to make an AI implementation work properly, but you don't need to do it everywhere. And so we felt like the fourth failure mode was spending way too much on horizontal platform and not enough on vertical application to get some ROI immediately and then expand the platform. And so we saw people make that mistake. And so Dearborn Labs then was created to address those four things. And the things that we think we did to do it are, one, we're a team of operators and builders. We've been doing it for a decade. We come in with this consultative frame and spend time helping people understand and redefine their workflows around AI. And then when we get deployed by someone to build it, we deploy those operators, not just engineers, but we deploy operators into the business to work with the team to build them something bespoke that's suited to their business and maintains their competitive advantage, and just enough to deliver real return on the business. Because as a startup, we never had the luxury of building something too big for our own good. And so we're pretty good at finding just enough to deliver real ROI for the business and then growing from there.
Super interesting. And when you go in and you're building something bespoke for the customer, do you have a suite of tools that you use? Do you have a platform you take with you that you build on top of? Is it like pure services? Is it services plus some platform? Like, how do you think about is there any similarities between each customer and each deployment, or is it very bespoke customer to customer?
What each customer needs tends to be bespoke. What we work with is what I would refer to as a very robust set of platform primitives. So like the things we built at Clearcover that underlie some of the tools we built at Clearcover. So you may not, if you're a commercial insurer, you may not want the exact AI claims copilot that the personal auto adjusters at Clearcover use, but certainly a bunch of the things that form the foundation of that AI claims copilot at Clearcover can form the foundation of a claims copilot in a commercial insurance business, or an underwriting workbench in a commercial insurance business, document parsing, figuring out what's real and what's not, surfacing that up into a queue of work for the user. Like, all of these things are platform primitives that end up being either reusable or pattern matchable when you go into a client and are working on a solution that is more bespoke for them.
Yeah, that's fair. That's fair. I think one thing that we found in the conversations that we have is that I think generally AI adoption is an organizational challenge, just broadly. But I think there seems to be a disconnect between, and I think this is because there hasn't been enough usage within organizations. And so there seems to be a disconnect between the executive perception of AI capability at board level and at CEO level, and then actually operationally what folks on the ground and the PMs and folks are actually getting done. There feels to be like a disparity there. Now, whether that's kind of the media doing a really good job of saying what these systems can and can't do, versus that, like, operators like yourself going in and actually executing on workflows. But like what we've seen is there seems to be a bit of disparity there within an organization. Have you seen that as well in terms of that challenge?
Yeah, I think you're absolutely right, and it is increasingly more difficult to overstate what AI is capable of, but it is still possible. And so, yes, you find that people have expectations that it doesn't hit, or it just makes more mistakes than they thought. And honestly, I mean, you live this as well. I'd be interested in your take. But the not so secret about building great AI implementations is that they often have less AI than you think. Because the fastest way to make it work badly is to put AI in a process that can be done quickly and in an automated fashion that should be deterministic in the first place. Yeah. And so, like, mapping that workflow and figuring out where AI needs to exist, where decisions require more reasoning or are more probabilistic than deterministic, is a much better way than saying, like, let's just let AI run loose on the whole process and make a bunch of deterministic decisions. Where that's not, like, we can talk about it, but I built my own chief of staff, my AI chief of staff, and it's been months and months of iteration and effort. And through those months and months, we've learned many things. One of them is that hooks work better than letting the AI just decide what to do. You end up building in quite a bit of determinism into the system to make sure that it functions properly and works in a consistent fashion. And it's the same way when you build systems in a business. Like, you put AI in the places where you have to, and it can be helpful, not in the places where you do not.
Yeah, I think the extension to that is just having them the context and the task be a little bit smaller. Like, as soon as you kind of let them be really long, and that's kind of, I think, maybe the hack in the hook is actually you're putting these kind of steps in place with the hooks, and therefore you kind of have a little more control in the workflow that the agent's running, and so therefore you get a bit more control. I think that's a kind of outside in view, but I think maybe that's part of kind of what you see there.
I agree.
Yeah. And to extend that a little bit in terms of really what we're talking about here is a like AI native operating model. Like, we're saying that in certain parts of an organization, the operating model that you used to run now can be run with a bunch of agents doing specific tasks. And if we're thinking about workflow tooling, cloud migrations, digital distribution, like all of these things are coming into an organization. And that causes a real problem for our CIO, right? It causes a real problem when making architectural decisions around how do I architect this organization where I've got these Guidewire, Duck Creek, got these big legacy systems in place, and now I need to kind of layer some agents in and re-architect somehow. Like, how are you, when you see the boardroom, you chat to these CIOs, they're having these conversations, how are they starting to think about this, like, change they have to make in architecture? Are they thinking big bang? Are they thinking, like, how do we do it small and iterative?
It depends. I think some are thinking small and iterative. Some are thinking big bang. Some of that depends on budget and how committed they are to the task. But I think two things that we do tend to hear consistently, and it's early, admittedly, so, again, the sample size isn't hundreds, but one is answering questions around data availability. right? Like where does the data live in the business, and how do I make it available to these tools in the way that it needs to be? Because people have spent time on it, but like there are still many people that are in the middle of a cloud migration, or their data lives on mainframe, or it lives in place. It's like it's just not, it's not kept in a place where it's going to be readily available to these new workflows and tools. And so the first question tends to be, we need to be candid with ourselves around data availability and what needs to happen for this data to be useful, to be even available for the model tools to be useful. The second question, which is related then, is like the sort of contextual layer that sits in between these AI implementations and whatever that data is. So to your point, like, there's policy admin vendors who are out there and have done, great things over many years, and people love them or they hate them, and it's the data lives in this system or that system, and I think everybody's trying to sort of figure out a way in that side of the market to become more AI native themselves and make more tools available. I think our take is, for many people, sort of having a vertical system with AI in it will be fine. For a bunch of people, they would prefer those systems just be headless, and they serve up data to a context layer that sits below the agent layer, and the agent layer draws from the context layer. And that agent layer then, when you have like a good context, I'll make this more tangible. We ran an exercise at Clearcover to understand how our underwriting workflows worked. Mm-hmm. And we sort of have a tool that we can use to run through a whole bunch of different data in the business and start to understand, like, how do things work today? How should they work, knowing what AI is capable of? And one of the things it spit out for us was that we had a ton of process documentation around how underwriting works at our business. And it turns out that most decisions were actually getting made in like 800 different private DMs within Slack. And if you don't have access to that bit of context, you will not actually understand how underwriting decisions get made at the business. And so like this context layer where you can surface data that represents the reality of how the business runs is critical to helping an agent do the job of a human. Because if the agent does it according to the workflow documentation and the human does it according to what they're doing in Slack with their peer, the agent's going to get it wrong. And so like that context layer is critically important. Now, you when you get to that context layer, now you have all sorts of questions around, okay, auth and permissioning and who can see what, and how do you sort of mix that data together? Because, it can be quite powerful. For example, we all have to protect our loss ratio. So what do you look at to make sure in advance your loss ratio is not going to start going the wrong way? We'll certainly look at frequency, leading indicator. So I'm going to look at frequency by coverage and understand what trend. But what if I wanted to go earlier than that? Okay, well, I might look at mix of business. What am I binding? Am I binding like the mix I expected to based on what my pricing is? Like, okay, I might look at that. But what if I wanted to go even earlier than that? The thing I'm going to look at is where my bind rate is higher than I think it should be. Because if I'm binding stuff at a higher rate suddenly than I expect to, you can be relatively certain it's because somebody found a hole in your pricing. And so that conversation, that lives in distribution, right? And so being able to have a context layer where suddenly the agent who's helping you run distribution can alert the agent running claims that bind rate just went up in this channel in this state beyond a level where we're like it. The distribution agent probably thinks that's a win. Only when you combine that context with the claims agent's guidance and goals will you say, actually, that's probably not a win at all. We have to look into that. And so like that cross-functional context is really powerful, and in an agentic world can be almost instantaneous. It doesn't have to be a cross-functional meeting every 2 weeks where you try and surface this stuff. So incredibly powerful, but comes to some challenges. So to answer your question, data availability and this context layer are two pretty consistent themes we hear in conversations with people around how you actually roll this stuff out.
Yeah,
from
super
a CIO
interesting.
seat.
Yeah, for sure. Super. We obviously work generally in the distribution layer, and so kind of think about agentic commerce and how like agents buy products transactionally. And one of the most important things we found when deploying these agentic agents is this control plane that sits underneath that has all of the context of the agent interaction with the MCP around every piece of context associated with what's been passed back. And so then you can pass that context on from the conversation. into then back into the core platform, into the rules that are based, i.e. what's the reinsurance rule, what's the loss ratio you're allowed to bind, all those kind of things, but you attach the context to the response. And that's been something really, really important from the CIOs have been looking at in terms of allowing those, being comfortable to allow the agents to run and to bind on behalf of the customer, is knowing that they have the essentially the lineage of how all of the decisions were made by the agent to agent interaction. And so, yeah, you're absolutely right. That context layer is going to be a complex one. I think there's going to be lots of parts to it. It's it's going to be a big one to solve for sure.
And that lineage is super important for many reasons, including what you stated, also including auditability.
Yeah,
which is critical, right? Like if you lose some of that context capture is about having proper auditability for what the agent saw in order to make the decision that it made. And so, making the right decisions is important. Understanding how the agent, like what the agent did and looked at in order to arrive at that decision from an auditability perspective, very important as well.
Yeah, being able to stand up in front of the regulator because Sally's had a claim rejected because of what an agent did. You've been able to stand behind how a decision was made if there wasn't a human in it. Yeah, could not agree more. Maybe, and we've edged into it a little bit here, but I suppose we've edged into this trend of the future of the insurance stack, really, which is like customers, humans, and agents somehow working together. And obviously, you're deep in this in bringing agents into organizations. Have you got a view of how these stacks? We're having this conversation 3, 4, 5 years time, maybe less, of like what these insurance stacks start to look and feel like, maybe on the technical level, but also on the organization level, like in terms of, because obviously they're both very related, I think.
Yeah. So on a technical level, you're right. I think we started to touch on it, but I do think there is this like this is going to sound pejorative. It's not meant to be, but there's like this utility layer where the core policy admin functions happen, and like maybe you build those, maybe you continue to rent them. They're very important, but also I think like that utility layer in many ways probably should become more and more headless. You look at what Salesforce is doing, I think you should see a similar analog over here. Above that then are going to be all these new data layers that we talked about, which is your context layer, governance, and audit, like all these things that sort of make the data rich and safe and permissioned properly for the agent to be able to do their job. And then you'll have an application layer, but that application layer will look different than it did in the past, because that application layer, I think, more and more will be software that is tends to be homegrown more often than it's bought. Depends on the use case. There'll be both, but I think you'll have this application layer with more custom software than there used to be. And within that custom software, the major theme will be agentic orchestration, where the human is still a vital part of the process, but the human's work is directed by the workflow and the intelligence of the agent within said workflow. So in today's world, like a lot of agentic tools, Clearcover included, the human has a workflow. There are parts of the workflow where they invoke the agent. And the agent gives them a result, and they go back to doing the work. I think sooner versus later, like might be very soon, that flips. And the agent owns the workflow, and they invoke the human when the human is required to do a task. And that, I think, is like architecturally, it's a little I'm obviously, I couldn't build it. I'm not technical. But like architecturally, I think you're going to see this inversion of that relationship where the agent directs the workflow and invokes the human, versus now where the human is mostly invoking the agent.
And how do you think, this is a little provocative and you don't have to go there if you don't want to, how do you think that affects the workforce in terms of the humans that work in insurers today? To give you some context, we work with a bunch of like large tier ones, and when I speak to the ventures parts of those businesses, they are standing in front of the CEOs and saying, like, we have a workforce problem coming, which is the workforce of tomorrow is going to be very different from the workforce of today, and we have to be thinking about how that fits and how it works, how we message it to the market, like what do we do within the business, how do we retrain, or how do we bring the right skills into the business? And so have you got I don't have to speak obviously any specifics, but a sense of how organizational human structure will change in the orgs based on what you just said, which is agents driving workflows and invoking a human versus the other way around?
It will make the humans a much more efficient resource. They'll be able to accomplish more, and we can get into it in a minute. But knowing what you're measuring in order to generate some financial output for the business is critically important. And so like that, but whatever that is that you're measuring, that will get better. Now what you do with that is going to be a function of where you are in your business's life cycle and what your strategy is. And so there's no use in hiding the ball. There will be some insurers for whom cost savings is the imperative. And as a result, because of this improved efficiency, they will reduce the size of their workforce to realize those cost savings. That's how you do it, right? Like if a process gets more efficient, we were talking about this the other day, processes don't cost money. People cost money and systems cost money. And so if you want to reduce your cost, you have to reduce one of those. And so like that is, or at least you have to add revenue relative to one of those. And so like, I think some people who are in a position where they need to save money will in fact reduce their workforce because that's just what they have to do in order to achieve their goal. Now, many other insurers though, who aren't in a position where they really need to, reduce their expenses immediately, are going to upskill and reskill, or maybe more importantly, going to use some of the productivity gains the tool provides to grow into that workforce that they have more quickly than they would otherwise. Right. And so like, I think there's basically three flavors of what you do with this. One is, yes, I did get more efficient. I'm going to reduce the size of my workforce. Two is I did get more efficient. And I'm going to retrain my workforce and like sort of deploy them elsewhere in the company. And the third is, yes, I got more efficient, but also I got more abundant. And as a result, I'm just going to grow into the workforce I have and not do the hiring I would have otherwise done. And that's how I realize my cost savings. And they all can work. And it's just a function of what you're trying to accomplish as a business.
Yeah, what strategy is. And flip that on its head and go, what's going to be the human advantage in this like AI native world? What, like my gut says relationship, taste, maybe judgment, like what, and obviously you're part of Dear Labs, and the proposition going into organizations is some of that like operational excellence. Have you like been there, done that, like seen it all, being able to execute effectively? And obviously that's part of relationships you have and being able to kind of go deeper on them. And so have you got a view on that? Like what's the human advantage when we start to kind of bring these agents in? Where do we bring humans into this in terms of the advantage they can bring?
I think you're right. Relationships. Yes. Yep. Taste is a great one. I think I've said the same thing before. I agree with you completely. Like the machines are getting better at it, but taste as it is a uniquely human attribute still, I think. Judgment, maybe less and less so, but maybe judgment. We should probably draw like a distinction between quantity and quality, because like I think the human probably is less efficient than the machine at applying that judgment repeatedly many times and as fast as the machine can do it. But the human will be better at auditing the machine's judgment to ensure that freedom is earned. And so like this notion of applying your judgment to the machine's judgment to make sure that it is on the right track and doing the right things is still going to be important. And really like, I still believe, because having experienced it with my agent, evolving the harness, right? And like, and making sure that the machine sort of has the appropriate guardrails, is adjusted to the reality of the business, is being fed the right context. Like the harnesses are not super automated at this point. And so like, I do think for a while now, having humans who are good at both building and maintaining the harnesses around these automated workforces will be very, very critical.
Yeah, interesting. Can we flip a little bit from spoken a bunch about theory. I'd love to jump in a little bit into practical and practical into your experience. So you today, Dearborn Labs, you work with a bunch of insurers. And so I imagine you're starting to get a sign, understand the signs that an organization is generally ready, genuinely ready for these kind of transformations versus maybe some hand waving and some AI theater. And we spoke earlier a little bit around big bang versus small initiative, like risk adjusted. So can you talk to me around that, around what are some of those kind of first three signs that you're going to may see in organizations generally ready to go into this agentic transformation versus kind of being happy to play in POC land and not really kind of execute in the real world?
Yeah, this is a fascinating question. I mean, and it's changing every day, right? I think there's more and more people who are edging ever closer to readiness than they were 2 months ago, than they were 6 months ago. I mean, in my opinion, the single biggest signal that someone is ready is that they sort of have made a real commitment to actually unpacking how the business works and thinking about how AI is going to sort of create new systems in their company, not just augment the existing work. We talked about this, but like this is not meant to be a knock on anyone, but like if sort of giving everyone a co-pilot license and seeing what they can come up with is not readiness. Now, is it culturally useful? Absolutely. Right? Like just getting people acclimated to the tool. Like I get it. There's plenty of change management reasons to do something like that. But if you really are a company that wants to take advantage of what the tools are capable of today, for us, like the number one signal is they are leaning into this idea of, I got to rebuild work. I don't need to build AI agents into my work.
Yeah, don't find a job for use the technology and find a job for it. Like find the job that's really a problem and then apply the technology to that thing. Have you come across some, and we've done a little bit, which is come across folks who've had some POCs, brought some consultancies in, like generally pretty expensive consultancies, built a bunch of stuff in a bunch of workshops, and those things have never really got kind of past kind of being anything but a POC, and that's generally because there's no executive sponsorship, there's no actual business deal that they're trying to solve, there's no P&L holder that's kind of putting their not their job on the line, but like really invested in this thing doing well. And I think that POC pain has given some like pause for some customers that we speak to. Have you found anything similar to that?
Mm-hmm. Yeah, we've heard stories from people on POCs that have not been as successful as they would like. I'm sure you've seen them too. So one of these is it just didn't work like they thought it would. To your point earlier, we had some assumptions around what the AI was capable of, and it just wasn't. Or more likely, we plugged it into something that didn't work all that well to begin with, and the AI wasn't capable enough to overcome the bad substrate that you put it on. And so, like, sometimes they fail because they just fail. I think the more interesting reason they fail is because people pick goals and metrics for the POC that don't deliver financial outcomes for the business. And like I'm sure you've lived this as well, but I was talking to someone the other day and said, a lot of AI metrics that people like to talk about, and we're guilty of this too, and that people will attach to a POC as proof of success, are like measuring miles per gallon in a car. It's like, oh yeah, I want to hit 28 miles per gallon driving this vehicle. And I have no idea whether or not driving 28 miles per gallon is going to help you achieve your goal in that car. Because if you're like driving a big truck, if you're right, exactly right. Like you're a big truck on the highway and you're making a road trip and you're headed in the right direction, like 28 miles per gallon might be a great win. But if you're in a racetrack, in like a GT3 RS at like 20 miles per gallon means you're probably going like 12 miles per hour. You're going to get your ass kicked. And so like that, like we pick these metrics that are just not, they sound like they make sense, but they're not connected to any real financial outcome in the business. And that's where I think POCs go to die, because then you say like, oh, we did it. And then it goes up the chain and it's like, what is this? All it did was add expense. And I can't, I now have no way to map this to a real financial income for my business. And so we were forced to do this as a startup because we couldn't afford to invest in things that didn't actually have a financial outcome attached to them. And that's where so that's why we never ran POCs, because you don't run them as a startup. You run experiments, but then you launch something and it better work. And so that's one reason it doesn't work. Second is I just think people tend to pick the wrong goals.
Do the wrong thing to follow. And extend that further, which is, what metrics do you think actually do matter? Does it vary? Does it vary on the workflow, on the business, on, you spoke earlier around like the job you want to be done? Is it very specific to what you're trying to achieve? Maybe that's going to sound super obvious, but is that the way you need to think about this, which is every metric needs to match exactly to what the business is trying to achieve versus having a generic set of metrics that this kind of proves success?
What matters is not so much the metric, because it does vary, but the map. So if you and I were going to run a POC in a business, the first thing we should do is go to a whiteboard. I need to know your goals, like the highest level goals for the business. Is it to increase earnings by this amount of money? It's a financial goal. They all are, right? And so like, what is it? Revenue growth? Is it earnings growth? It's probably one of those two. And then from there, what we need to do is build essentially a metric tree and say, cool, what are it's revenue. Let's say I need to grow revenue by 15% this year. All right, what I want to do is say, what's the next layer of inputs to that output? Okay, now I have those written down. What's the next layer of input? So it's going to be unit sales times average cost per unit. Okay, now bring next layer down, unit sales. What is that going to be a function of? Is that a function of like how many phone calls we're making to people and what our conversion rate is? Okay, let's do it that way. All right, conversion rate, what is that a function of? Is it a function of, and so you just sort of work your way down this metrics tree until you can put a circle around the thing that like, this is what the POC is intended to influence. And so if we move this one by this much, I can work my way back up the tree and see my way to this financial impact on the business. And that's what I just think people, they'll say, oh, we're gonna improve your reps will handle 33% more tickets than they did prior. Well, like, I guess that's okay, but I haven't gone up the tree with that. Mm-hmm. Like what? So like we're implying that sort of tickets handled per rep is important, but we haven't mapped it all the way up to the financial outcome for the business. And that's what, again, this map, this like tree of metrics that all feed up to the thing that actually is going to deliver a result for the company is really important. That'll lead you to the metric that actually matters.
Love that. Carl, I could literally speak to you all day, but I'm going to have one last question for you. And we have a bunch of execs that listen to this: CIOs, CEOs, CTOs, like head of engineering, those kind of folks. And a lot of them will be debating a lot of things that we've spoken about today, which is, am I ready? I want to do it. CEOs telling CIOs, say, hey, I need to be showing something to the board of what we're doing, some metrics to show that we're having some progress. Can you give me something tangible, maybe like a 30-day action plan? Like what for the next 30 days should this person do to be that's really practical to go, yeah, we need to lean in here. We're ready. We're not ready. Like what does that exec need to do over the next 30 days to try and get themselves in front of the curve and lean into this kind of agentic kind of push within the organization?
This is a really interesting question, and I'm going to make it a bit of a meta point because you're a kind host and you sent the questions over in advance, and we gave them to my AI. And Jarvis is my AI, and he got it wrong. This answer is wrong. So what Jarvis said is like, oh, senior leadership should start using the frontier models directly so they can get hands-on experience and understand what they're capable of. And like, I don't know if that's just Claude trying to bump token usage. Like if that's the case, like well done, Anthropic. But I don't think that's the answer. I think we need a little bit of harness curation here for the AI that drafted that response.
Yeah,
I think the answer is. It's the same thing that needs to happen anytime you actually want work done in a business. You have to make someone responsible for it, right? And then you have to empower that person with the capital and the authority to go and do the work. It is not going to happen if you stand up in front of the company and say, we're going to be an AI company, everyone, please use Claude Chat. Doomed. But if you find someone in your organization or you hire someone, and like this is a bit self-serving, but it doesn't have to be me. But if you go find somebody and you make them the responsible individual for running a real AI project that's going to deliver a real financial outcome for the business, and you give them the budget, capital, and you give them the authority to take that action, you're going to learn something. You may not succeed, but you will learn something real because you will put something real into production. And so like that for me, like 30-day plan is, oddly enough, it's more change in human capital centric than not, which is put someone in charge of it, give them the money, give them the authority, and give them a directive to accomplish something real. And I think that gets you a lot further.
Kyle, that is awesome. As always, it's generally the simplest advice that's the best. So I really appreciate that. Look, thank you so much for your time.